traders, Akil Stokes here. Welcome back to another video. Usually you guys see me on the weekend for the Trading Edge video, but wanted to pop in on a random Tuesday and share with you guys a video really because I had something insightful and helpful to share, and well, this is the platform in which I do it. If you guys are brand new, I am a Forex trader, I am a trading coach, I am also the co-founder of Tier1Trading.com. And today we had an excellent live trading room session. And one of the topics that we discussed was about newer traders bouncing from system to system and really kind of the hazards that come with doing that. And I guess bigger picture, the conversation started with a social media post the other day. If you guys don't follow me on social media, do so right now at Akil Stokes RTM. I'm on Twitter, Facebook, Instagram, because something that I do on a daily basis is I share a quote of the day. And I do this for two reasons. And one reason starts a long time ago, back when I was in the same shoes as many of you guys. You know, although I am a consistently profitable and successful trader now, and I have been for years, that wasn't always the case. When I first started off for years, I struggled. I was consistently bleeding money in the market. I had no friends to talk to. And it was a really dark period in my life, right? I had quit 3 jobs to focus on trading, thinking it was going to be some get-rich-quick scheme, and reality slapped me in the face. And there were a lot of depressing days, a lot of really hard nights trying to master the market and feeling like I'm either going backwards or getting nowhere. And something that my friends and I did, because I had friends going through the same thing, not necessarily in trading, but in different career paths. We all started around the time of the recession here in the US, so it wasn't fun for trying to get a job. But something that me and my friends did was we started finding inspirational and motivational posts. We actually started a website called Good Vibes, where each of us, we'd alternate the days. We would find a motivational quote, we'd share it, and then we'd read it and kind of write our opinion about it. And this was something that was used sort of just like a mood booster, right? To wake up and kind of like a pep talk from a coach to get you in the right mindset to go and attack the day. And it worked really well, and it's a tradition in which I continued throughout my trading journey. Now, the quotes that I post have become more specific to trading. I still mix in a little just pure educational or inspirational, motivational one every now and then, but most of them are trading related. And for me, it's a way just to get the mind going in the beginning of the day and just kind of remind me of where I came from and sort of the basic principles that I need to follow if I want to continue to see success. The other reason I post this is to generate discussion. If you guys followed or listened to the last video I did, or 2 videos ago perhaps, we had a good conversation on just the amount of ways that one can be successful in trading. There isn't one strategy that works the same for everyone. You can be a fundamental trader, you can be a technical trader, you can be a trend continuation trader, you can be a counter trend trader, you can be a moving average trader, indicator-based trader, you can be a pure price action trader. It doesn't really matter what you choose. You can be successful doing all of them. And I like sharing these quotes because it encourages discussion. And for you guys that are newer traders, you're still at the point right now where you're trying to figure out what you want to be. And I think the best way to do so is to get experience, to experience lots of different things. So yes, you're listening to my YouTube channel and I'm telling you my opinions on the market and how I like to trade, but it's not the only way, right? There's someone else out there that has a difference in opinion. There's someone else out there that has a difference in opinion. And I think the best way to kind of form that opinion on your own is to take in what everyone's saying, read it, let it marinate, evaluate it, and then kind of make the decision for yourself. And when we post certain quotes like that, it does a great job of doing so. So anyway, the other day, the quote I posted was about jumping from strategy to strategy, how many newer traders want to be trend traders while the market is trending, and then when the market goes into consolidation, they want to be counter trend traders or consolidating traders, and they think that it's going to be a perfect mesh. Well, I'll just switch to this when it's doing that, I'll switch to that when it's doing that. Unfortunately, that's not really realistic, and the clip I want to show you from our live trading room shows you kind of the devastation that can come with that, but it also shows you a way that you can do that without kind of the risk on the downside. So check it out. Let me know what you think. As always, do me a big favor before we get started. Hit that like button and make sure you subscribe if you're new. That way you won't miss these random kind of midweek videos next time. A little bit, but it comes back into that range. So we're not saying that, and I showed you guys the quote yesterday in the Q&A session about, you know, how some traders a lot of traders come in with the idea where it's like, okay, well, when the market's consolidating, I'm going to switch to my consolidating strategy. But then when the markets are trending, I'm going to switch to my trending strategy. And do you think that's a good idea or a bad idea? Yeah, Max says it's a bad idea. Why is it a bad idea? Why is it a bad idea to switch from one to the other? No consistency. Anybody else? Psychological reasons. What psychological reasons would they be? Gab mob. I always feel like Gab mob is like the enforcer. She comes in, just lets you know, like, you know, I'm here. Like, hey, I'm not gonna be active, but I'm watching. I'm watching you guys. The mob is watching. Don't act up. Max, since you're already late, break those legs. But what psychological reason? I imagine that a consistent mindset is healthy for a trading. Okay, I'm just curious, yeah. And I do think that's true, right? One of the things that I always say is this, right? When do we know that a market is trending? What are the rules that we teach here at Tier 1 for you guys that have been through training courses, right? A 3-point move, right? And many a times you guys come to me and you're like, well, Akil, you know, I'll say something like, I'm looking for a pullback right here. You're like, Akil, well, you can't really look for a pullback right here because we're not in officially a trend yet. And it's like, yeah, per our rules, right? Now the market could be in a trend, but we're not in a confirmed trend until we have this 3-point move, right? After we have this 3-point move, we can consider this a confirmed trend, but guess what the market's already doing? The market's already trending, right? And typically, traditionally, you know, your market's supposed to move in 3 waves and whatnot, right? And we can do the same thing. When a market's in consolidation, how do we know when a market's in consolidation? Right? After it's in consolidation, right? So what the risk is for someone who is trying to bounce back and forth, and it's very important that we talk about this part of it, the switching and the bounce back and forth, is typically by the time you notice that the market's in consolidation and you switch to this consolidating pattern, just a trading style, the market may be done with consolidation and it may be time to break out into another trend. So now you're a little bit late to the party. But then, of course, you want to wait till you have confirmation that the market is trending before you implement your trend trading strategy. And as soon as you do that, market goes back into consolidation. You're always one step behind the market because you're trying to switch. It's very similar. How many of you guys have ever traded? How many of you guys have ever tried to trade breakouts? Especially like a news breakout. Avery says pound yen 1 hour bull cipher X at 135.17. How much time we have on that, Avery? Close? Are we going from C to D or we have some time on that? Just so I know whether I need to cut this rant short and look at it. Getting close. All right, give me 1 second here. Let me just take a peek at that. So I can show you guys. This is a 60-minute pound yen cipher. You're looking at an X leg at 135.17, which would be right down here. So here's what Avery's looking at. X to A, swing low to swing high right here. Let me know if I'm wrong. X to A to B, B to C, and then C to D right there. All right, so train of thought. Get your train of thought back, Akil. We were talking about... Oh, breakouts. How many of you guys have ever traded a breakout? Maybe like you see a news event and the market breaks out in the direction, right? So here's what typically happens, right? So let's say let's say this is a previous level of resistance. The market is consolidating, and then the market breaks out and does something like this, right? We have a clear directional movement. At that point, and this is a rookie trader mistake that maybe I might have made it a few times, right? You see a big breakout from that resistance level. It breaks out, it's moving, it's a high momentum bullish candle. And what do you say to yourselves, right? Everyone's CNBC, everyone's talking about it, and you got to buy this, you got to buy that, right? Buy. So what do? You're like, oh man, I don't want to miss the move, and you buy it. And what happens as soon as you buy it? As soon as you buy it, it starts to retrace. And of course, from a psychological standpoint, what happens is you bought it up here, you probably leave your computer, you do your happy dance, you're all excited, I got the move. And you come back and now it retraces, you're like, crap. And whenever you're in a position where you are feeling pain, right? You bought something, you are now in the negative, you have big red numbers on your P&L, you feel pain, right? What is the natural instinct when we feel pain? To do what? Is it to feel more pain, or is it to get ourselves out of a painful situation? It is to remove ourselves from a painful situation, right? When you touch a hot stove and it burns, do you sit there with your hand on it? No. You remove it, right? So in a trading aspect or trading sense, how do we remove pain? Joy says, I burned the stove back. How do we remove pain when we're in a trading situation? If we are in a trade if we are in a trade and we're losing money, how do we get out of that pain? We exit the position, right? We've had enough pain, we've had enough torture, we exit the position. Right? So now you exit the position here. Now, that would be a normal, smarter thing to do. It wouldn't have been smart to get into trade in the first place, but let's just say you did. A normal, smarter thing to do would be to remove yourself from that pain. Now, put yourself in rookie trader mode again. Put yourself in Akil 2008, 2009 trader mode. Maybe not as much 2009. And after you remove yourself from pain, right, and this market is roaring back down, what's the next natural instinct? Do you want to sit there and accept that you had your pain and you lost it? You want to admit to your mistake? Yeah, man, I know I shouldn't have bought it. It was an impulsive, emotional decision. And, I took a few dollars, but, it's good that I got out of it for a little bit of a loss. No, right? You want to make it back. You want to make it back, right? You say, the market was rallying up. I tried to get involved at the highs. It didn't work, but now the market is moving backwards. Obviously, it's a reversal. And let me know if this sounds familiar. How about I sell and at least I can make up for some of my losses? Does that sound familiar at all? If I sell and catch the move down, at least I can make up for some of the losses, maybe get the break even. Yeah? Ring a bell, anybody? So then you sell it right here. And then guess what happens when you sell it right here? Guess what happens when you sell it right here? What does the market do? What does it do? What does it do? Bam, right? It shoots back up and now you lost on both ends. And now not only are you mad that you lost on your sell, but now you're saying to yourself, if I just would have kept my original position, I would. Here's the hard part, right? Because not only did you lose on both sides, right? Not only did the market whipsaw you, right? This is the market just whipping newer traders back and forth, right? Like an old school WWF or WWE tag team match where they're just throwing you back and forth across the ropes and each person just keeps coming and clotheslines you. Any of you wrestling fans back then, right? Throws you, you bounce off the rope. Boom, clothesline, tag the partner in, they throw you off the rope. Boom, clothesline, just one of those type deals. But not only are you whipsaw, you take losses on both sides, but you don't learn any lessons. Yeah, and then Ale says, yeah, oh, my broker knew where my stops were at, my orders were at, so he zoomed in on me personally because I'm that important to my broker. Out of all the hundreds and thousands of clients my broker has, he was looking at me because you're that important with your whatever $1,000 trading account. Yeah, that's the natural excuse, the broker. But people don't learn from this situation because guess what? Guess what they tell themselves? People that don't want to learn, don't learn. Let's put it that way. They tell themselves, well, you know what? If I would have just, I was actually right. Because guys, if you remember, my first position was a bullish position. I was actually right because the market did end up going bullish. I just had my stop losses in the wrong place. I just got out a little bit too early. And now you've justified it that, yeah, I was right. And then guess what's going to happen the next time the market does this? Are you going to learn your lesson and stay out of it? No, you're going to do it again. Because you were right last time, you were just a little bit wrong, and you just took your stop losses off a little bit too early. So next time you'll just hold your stop losses. You'll hold on for a little bit longer, and you'll take an even bigger loss in the first move down. And you see this all the time, and this is an example again of people being one step behind the market. And this is a normal movement, guys. If you look at this on a simple price chart, again, this is nothing more than what? Breakout, pullback trade, right? Same thing there. But yeah, when you're always behind the market trying to switch back and forth, you're always going to be one step behind. And our goal as traders, we don't want to be one step behind. We want to be predictive and one step before, right? Predictive in our analysis, reactive in our execution. We don't want to wait till the market kind of does something and then hop on emotionally late. No, we want to predict what we think is going to happen, plan a way to get involved before it happens, and hopefully involve ourselves in the move when it happens. And if it doesn't, then we wait until the next opportunity. But you're dealing with the same thing for people that go into and they try to trade, they try to switch to a consolidating strategy when the market's in consolidation. And you try to switch to a trend trading strategy when the market is in trend. So what is the solution? What is the solution? If you're not supposed to switch strategies when the market's doing one thing and the market doing the other thing, because you're always going to be one step behind, what's the solution? Max says, finish one, test one, trade one. Ale says, wait for your right chance. George says, multiple strategies. Yeah, two solutions that I see. One is you stick to your strategy, right? We always talk about, as a newer trader, simplify your trading, have a single strategy that you focus on, master it, be the greatest at it before adding more, right? If you have one strategy and, let's say that strategy happens to be a trend continuation strategy, right? So you're looking for trending markets. Akil, what do I do when the market's consolidating? What do you think you do? If you're a trend trader and the market's consolidating, what do you do when the market's consolidating? Yeah, you do nothing. You do nothing, right? Your strategy is not meant for that. You don't do anything. But we know that there's this need to be in the market at all times. People see profit. They see other traders and profit being made on the internet, right? Social media is showing you screenshots of all this profit being made, and you feel like you're missing out. So I have to be involved at every single time. That's what the market wants you to do, right? Isn't that what a casino wants you to do? Right? Isn't that why casinos don't have windows? They don't have clocks. They put scents in the air vents, right? They want you to stay. They want you to be playing at all time, bells and whistles and loud noises, all the things that kind of get you excited. They want you to play all the time, because if you're just playing all the time just for the hell of it, who are you giving your money to? You're giving your money to the casino.
if you have a single strategy, you wait for the opportune time to trade your strategy. Wait for the rules are met. And when the market is in a condition or a phase that meets the rules of your strategy, that's when you trade it. When it's not, you stay out of it. So that's one way to do it. Another way is you have multiple strategies that take advantage of different market conditions. And this in multiple strategies is different from switching, because you're not switching. George isn't saying, okay, well, I'm going to ditch my trend trading strategy now and go to my structure trading strategy. No, he's doing both. And he's created both, right, in a way, and this is the kind of the hard part we always talk about, especially when you're dealing with counter trend or trend continuation. He's created both in a way where they have unique rules. And I suppose he could have, I guess you can do it, you could have two separate accounts and trade them differently that way. You could do that. I think there's a psychological element to that can get you in trouble. But that is an option. Or George can have two different strategies. And when he created his rules for these strategies, they're created in a way where they don't conflict. And now when the market is in consolidation, maybe his trend trading strategy doesn't perform as well. Maybe there are a few opportunities that he misses there, but his counter trend trading strategy or his consolidating strategy hedges that, because those type of trades are winning. And it creates kind of a natural smoothness to your equity curve. I told you guys my story. The month of September, which is approaching, was one of the reasons I started looking into really adding trend trading strategies to my portfolio. I was mainly a counter trend trader for the longest period of time, and September was historically a directional month, and I would just get routed in September. September would come and just smack me around, right? Because it was typically a very directional month. So I started looking into ways that I can take advantage of that, and I started adding more trending-based strategies. And what it did was it balanced out my September, balanced out some of my other months. Now, did I take a few losses on my counter trend and pattern trading strategies in September? Yes, but because I added another strategy that had a positive expectancy, I made up for it in what I made from those moves. So that's another way to handle it. So two ways there. There's a nice little Tuesday morning lesson for you guys. Nick says, Keel, I have a buddy that's new to trading that wants to create a combination of trend trading and advanced patterns. I'm telling him as a new trader, it's better to stick to one or the other. Would you agree? Yep. And Max says, you can only test one at a time anyway. Well, actually, Max, believe it or not, I agree with you 100%. But I've ran into a handful of traders that are testing like 5 different strategies at the same time, which I think is pointless. I mean, try try focusing on 5 things at the same time in life and see where that gets you. But yeah, I would say this to him, Nick. Choose one. Doesn't matter which one, whichever one he prefers. Choose one, focus on that one, get really good at that one. Start, go through the process of strategy development, back testing, paper trading, and then live trading that one strategy, right? Hopefully you can make some money while you're live trading that one strategy. While you're live trading that one strategy, then start testing the next one. So now at least you're making some income while you're testing. I actually spoke to, we're already off on a rant, but George said there's nothing in the markets. I put out a tweet the other day where I was like, because I was having another conversation. I was like, I try not to comment on people's strategies and stuff like that because I don't really care how you trade. I trust that if you've done the work, what you're trading is profitable. It has a positive expectancy and it works for you. Who am I to judge? But I said the one thing I can't wrap my head around is people that don't backtest. And believe it, and I got it was a comment on YouTube as well where it's like, hey, I have a mentor type. I figured out it wasn't actually his mentor, but a mentor type that said backtesting is BS. Akil, what do you think about that? And we went on this whole conversation. And I found out the person that was his quote unquote mentor, that he thought was his mentor, was actually a trading coach that I know. And he hit me up on Instagram, sent me a DM. He said, Akil, I'm that mentor person he's talking about. I don't really mentor him, but like he watches my stuff. And I'm like, really? I said, so you, I said, and you think back testing is pointless and BS? He said, yup. And I said, I've never. I was shocked because I've never, and maybe because I surround myself with the right people, I've never encountered a professional trader, a trader that I trust, that I believe is doing the right things in the market. And this person, by all means, I think he's a quality trader, a quality trading coach. But I've never heard that. I didn't want to start an argument because I don't really. There's no point in starting an argument. I didn't see any benefit to it. But that was interesting to hear that from a reputable trader. Interesting. But my guess is this, and when I always explain, I think people don't get the point where, typically the argument is between back testing and paper trading, right? It's like, well, paper trading is more important than back testing, and then it's like, well, how can you tell if your system can withstand different market conditions? With paper trading, you got to paper trade for like 5 years. You're just opportunity cost, blah 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 like that. But I think people get, and this is my hope. If not, I don't know where to go on this subject. But my hope is that maybe he thinks that you should back test, but not paper trade. You should back test, and that's all. And for you guys that have been with us, right? Is that what we preach? Do we say, hey, just back test and start trading it live? No. You got to back test and then you've got to demo trade. But yeah, that was it was shocking. But yeah, tell them focus on one strategy at a time. Nick says he'll be watching. Yeah, I've won over a few people in the last couple of days. There was another guy that I won over. He's like, Keel, I kind of like this back testing thing. I may have to look into it. Yeah, we should. So slowly changing mind. But yeah, but that was interesting. Interesting to hear that from someone that is reputable. So Euro Yen, let's go down to the 240 chart. Cipher traders from last, and this kind of falls into our conversation because last week, who remembers what we had last week here on the Euro Yen? Maybe some of you guys don't want to remember. We had two cipher patterns, right? We had a smaller cipher pattern here, taken by me. And then we had a bigger cipher pattern down here, taken by some of you. And the smaller one was blown out. Stopped out in the smaller one. And the big one just hit target one. So congrats to you guys that just made some money on this pattern formation. But this is another example of someone that doesn't have rules, how they're going to get into trouble. Because we talk about this all the time. Akil, what do I do when I have two advanced patterns setting up in this type of situation? Right? And what's the typical answer to that? You got to choose what you do. You got to either choose to take the first one, the smaller one, the bigger one, both. Doesn't matter what you do as long as you have rules for how you do it. You can take the one that completes first. You can take the one that completes second. You can take a half position at both. You can have separate accounts and take both. Doesn't matter what you choose, but you got to be consistent in what you do. But this would be a perfect example of the problems that happen if you don't have consistency. Same as kind of the counter trend versus trend continuation deal, right? Let's say this time you took the first pattern. He's like, that's what Akil does. Akil takes the first pattern. I'm going to take this pattern. The stop loss for this first pattern was below the second one. So it was one of those where I couldn't take both. And this time, the first pattern gets stopped out, and the bigger pattern wins. Well, you're feeling pretty bad, right? How do you think you're feeling? You identified both. You took the one that lost, and you sat on the sideline and watched the one that won, right? You're feeling pretty bad. So what do you think happens the next time? Again, put yourself in rookie trader mode. I know you guys aren't doing this, but what do you think happens the next time this situation comes up? Are you still going to take, for the undisciplined trader, are you still going to take the smaller one? No, you probably don't trade it because, right, recency bias. You're like, well, the bigger one won last time, so I'm going to wait for the bigger one. And of course, what happens that time? What happens when you don't put your orders here and you wait for the bigger one? Well, this time, the smaller one wins. And once again, now you're back, you're bouncing back and forth between this and that. You're on that emotional yo-yo. You're getting thrown across the ropes, right? By Razor Ramon, Randy Savage. And you're always one step behind. So you got to be consistent in what you do. That's the whole point of a strategy. It is trading probabilities, right? The edge that you create in the market for profitability, for you guys that are new, the edge that you create in the market is based off of your probabilities, right? Risk reward, right? Risk management and probabilities. And it means taking a consistent approach to the market. If you consistently do this action, then the probabilities are likely to play out in your favor. But as soon as you start picking and choosing, right, and you no longer have that consistency in the market, well, now those probabilities change, and now it's more randomness than anything. And randomness is going to do you nothing but have you stuck in that boom or bust category like Mark Douglas talked about, where you're going to be good enough not to blow your account, but not good enough to really see any gains, and you're going to really just tread sideways, tread water for years and years and years. And of course, it may not seem like you're losing out on anything. Well, Akil, I've been trading for 10 years and I haven't really lost any money. Well, you lost something that's much more important than money. And what's that? Time. You're 10 years older and you have nothing to show for it. You've wasted 10 years of potentially making money. So consistency is key. Consistency is key. All right. Now, we go down one time frame lower.
All right, so I hope you guys enjoyed this video. Do me a favor, leave me a comment below. Again, this is a topic that has generated a lot of discussion. I've shared with you my opinion. You may have a different opinion. Please let me know below. You guys know I go through each and every one of these YouTube comments. It's a safe space for traders, meaning there are no trolls present. So you can feel free and open to share your opinion without getting judged in a harsh way. And I can tell you what, if you read through them, there are some very insightful stuff, some very good lessons from newer traders asking similar questions that you may have, and also experienced traders that just want to lend their opinion on maybe what they think or how they've overcome that obstacle on their own. It's stuff I wish I had as a rookie trader. I didn't, but now we can provide it for you. So I hope you guys enjoy. Remember to like this video on your way out. I will see you this weekend with another episode of the Weekend Trading Edge, and wish you the best of luck in the rest of your trading week. Until next time, plan your trade, trade your plan. You guys have a great week.